How's it going, everyone? It's Sam. We have to take a look at the interview that Michael Saylor just did with Jamie Tree, so you can check him out on YouTube. I have not watched the full video yet, but it's super interesting. I'm going to watch the whole thing later. But we need to take a look at what Michael Saylor just said about inflation, because I think he makes some great points here, and I'm going to expand on it and talk about how the recent inflation actually cost you over $400,000. Now, we'll just get right into it. If you guys don't mind hitting the like button, I appreciate that. Please hit subscribe. And if you guys want, there is a link down there to BlockFi to get an interest rate on your cryptocurrency and to get a bonus for signing up and depositing on their platform. They have Bitcoin, Ethereum, stablecoin, and a bunch of other coins. And I just got my Bitcoin back rewards credit card recently. So definitely check that out underneath the video. So let's take a look at the interview here.
Response to, I've seen Fed officials sort of in the last few months have called the high inflation numbers that we've seen over the last few months, they've called it transitory, or they're inferring that it will be in any way short-lived. What's sort of your response to that, and do you think it's irresponsible to be making comments like that, or how do you respond to those, that sort of notion?
I think inflation is a vector, and so it's not one number, it's not a scalar, and you can't use arithmetic. If you want to be simplistic, you say inflation is CPI or PCE, and it's one number, and we were targeting 2%, and now it's 4 or 5. But that's not the way I think it is. I think it's an n-dimensional vector. So, for example, I think the inflation rate in single-family homes in the U.S. is 25%. I think inflation rate in equity was 38%. The S&P 500 index is up 38%. The cost of buying a share of stock in a company is 38% higher. So if you look at asset inflation, Bitcoin's up 270%, NASDAQ is up 40-something%. There's no inflation in gold, that's flat. Real estate's up 20% or more. You know, you can find a market basket of things called CPI that are only up 5%, and you can say that's transitory. It's irrelevant whether it's transitory or not. If I keep track of a list of things that you don't want to buy, and I tell you that the price hasn't gone up, what does it matter whether the price went up or not? The question is, what do you want to buy, and what price is it going up? And I think the price is going up at a different rate every month in every different place in the world and every different cohort for 1,000 different products, services, and assets. And you know, if you understand that, then the best surrogate for an investor is the monetary inflation rate, and the monetary inflation rate is somewhere between the M2 money supply expansion and the S&P index. Take the S&P index, 38%, it's up, and then subtract 3% risk premium, and you could say there's a 35% risk-free hurdle rate. That was the rate at which the currency devalued, right? The dollar weakened by enough to drive the stock indexes up by 38% this year instead of 10%, which is the average over 100 years. So, you know, and it was when it was going up 10% a year, it was inflating at 7%. I think the money supply expands at 7%. You tack on a 3% risk premium, that gets you 10%. That's normal, and we're like triple normal, depending upon what your reference point is. If you're taking monthly averages or quarterly averages or daily averages.
Definitely, yeah. I definitely agree. But I foreseeable future.
I think the most important thing for anybody is figure out where you're going to live, and then what is a market basket of scarce, desirable assets inflating at, because you're going to want desirable, scarce assets in the market where you live. That is your inflation rate. That's more akin to an asset inflation rate than it is a CPI or any kind of other inflation rate. Once you figure that out, then you have a decent true north to guide you.
Gotcha.
So, kind of an interesting thing they said there, right? Obviously, not only has the price of goods and services gone up, but also some of the biggest purchases that you make have gone up. And especially if you're an investor, the prices have gone up. Sure, there are certain assets that are down a little bit, but think about the massive assets that you have, especially towards retirement. Let's take a look at some of them here for a second. We have the S&P 500 up to $4,300. So if we go from a year ago, it's up 38%. Look at Bitcoin. It's gone from 9,000 all the way up to 33,500. The price of homes have gone up 13.2%. So those are some of the massive purchases that you make towards financial independence. So not only have you had to pay more for your goods and services and all your expenses, but all the other prices have gone up even more drastically. So I pulled together some different numbers here we can take a look at to see exactly how much this is hurting you overall based on the last 12 months. So new homes have gone up 13.2%, like we said. So the prior cost per year for the annual budget, this is just a few years back. Now this is the new cost because you can't get this for like the current year. It's past looking. So it was about 20,000. Now it's over 22,300 just based on the actual prices of homes going up. Of course, there are renters and stuff like that too that you have to factor in. Cars, I looked at the breakdown between new cars and old cars. They're being sold every single year. And between those two, you take the amount that they've gone up and then multiply them out by the percentage of cars being sold. And you have all cars, the average of cars going up about 22% over the last year. The annual cost of a car is about $9,500. Now new cost about $11,600. Again, these are like back of the envelope. Of course, there's insurance in here and stuff like that. And then we have food. Food rose about 2.2%, so just pretty normal, but still an extra $170. Now, assuming we actually increase our wage a little bit, we'll take a look at the percentage of your budget that accounts for. But let's take a look. So $37,000 was the old cost. Now it's about $42,000. So almost $5,000 there that it has increased. Now, what if your salary goes up just 2%? You only make $1,200 more dollars. This is the average salary. Again, based on some older results, but let's say salaries have gone up 2%. Well, how much is this actually a percentage of your budget? Well, it went from about 62% to 68%. So 6% savings rate gone down. Now, of course, people could just say, hey, I'm not going to purchase a new car, so the budget actually might go down, but this is assuming you're buying the same amount of everything that you did before. Maybe you get a cheaper house, but now we're saying, again, same house. We're saying you're getting the same food. Most people would adjust these down. But if you want the exact same stuff you got before, it's going to cost you 6% more. This is a difference of $3,480 a year. So overall, over 30 years, if you're getting an 8% rate of return, that would cost you $394,000. Now, not only that, but you're actually paying more for all those other assets. So let's say you're someone that wants to put a significant amount more. Maybe you make like $80,000 and you want to put an extra $20,000 a year towards the stock market. It's going to cost you 38% more for the S&P than it did a year ago. So right now, I think this part that Michael Saylor said at the end, where he talks about finding a place to live and then finding a scarce asset, makes a lot of sense. Obviously, you want to find scarce assets in terms of homes, right? You want to find where people really want to be, where there's going to be a lot of people trying to get that asset, right? If you're in a new development or something like that, a lot of people will want to live around there if there's like a new part of your downtown. But then also what he's talking about here is maybe you want to buy scarce assets like Bitcoin, right? Where there's only so much. If it's going to be in demand later as an inflation hedge, because all this breaks down to inflation, right? All these different higher numbers break down to inflation. If you can find yourself a scarce asset that's going to be in demand later, it makes sense to buy it now when it's cheaper, because you never know where it's going to go in the future. If we look long term, right, we can have the ups and downs of the market. Here, I'm sure people were talking about, is there going to be a crash? Or maybe back in October, we fell down, 5%? And then all these low dips, people are always talking about, oh, is this going to be the crash or something? But when you zoom out on the market, you can see that it continuously goes up. Now, of course, we can always have drops, right? It's always nice to have some money on the sidelines. I always like to keep 10 to 20% on the sidelines. But long term, where has the stock market gone? Where have scarce assets gone? Up and to the right, right? And this is being more obvious every single year because the slope keeps on getting steeper. Of course, we could always have dips, but if you buy good long-term assets at good prices, then you should be fine long-term. Now, of course, I'm not a financial advisor. I just found this part of this interview very interesting, and I thought it was cool how he put it in terms that, a lot of people can understand and can totally agree with. And then I want to break down some of the numbers on what this actually means for normal people. This is the average American household that's spending $37,000 on these three major categories out of their $60,000. So I thought it was cool to take a look at how it broke down. Now, if you want to get an interest rate on your crypto, you can check out BlockFi underneath the video. Also, if you want, you can get a couple free stocks from Webull. Just deposit $5 on their platform underneath the video. Thank you guys so much. I appreciate it. Be on the lookout for a video on a SPAC that I just started buying. That's going to be coming here soon. If you guys want this information faster, you can check out the link down below to the Patreon. Thank you guys, and I'll see you in the next video. Bye.